Happy Friday, everyone. How are we feeling today? So we're starting to get to the warmth again, where we're not nearly as cold anymore. I don't know. Maybe it's an illusion. The sun is shining outside, but it doesn't feel like it's getting warmer. But I don't know. I suppose we're hoping for brighter and warmer days in the near future. Just as a reminder, I mentioned this on Monday, and I think that it kind of got overlooked by me, and maybe it was Wednesday that I talked about it. I'm pretty sure I talked about it, but we do have group projects at the end of the semester, and I want to try to get these groups assigned. There are going to be 3 groups in this class, which again, 13 people, 1 group of 5, 2 groups of 4. I currently have 0 groups formed, so I'd like to get those done. I think my deadline was by the end of this week, but since I have 0 groups formed, that's kind of difficult. So please reach out to people, let them know. I am going to make a hard deadline by the end of next week. If I have 0 groups formed at this time on Friday, then I'm going to pull out a die, and I'm going to roll for see who goes into what groups. It's going to be numbers 1 through 13, which I know there's probably dies that actually do that. But you can create a virtual die online, and we'll do that as a class, and we'll root and cheer on everybody who goes into the groups at random. So if you don't want to be assigned to a group at random, please let me know. Today we got some more Theranos saga. So we had 3 chapters to talk about, and the 3 chapters dealt with 3 different scenarios. So the first chapter was dealt with Safeway exploits. And then the second chapter dealt with the U.S. Army and Lieutenant Colonel Shoemaker. And so I think that was actually the name of the chapter, who is LTC Shoemaker. And then last one was about the ongoing Fuse saga. And so we had Richard Fuse come back again. So he's gonna come make a visit. So all we really need to say about the whole Safeway debacle is that Elizabeth Holmes is an incredible salesperson and can make people believe things that didn't necessarily exist. And so this rational human being, Steve Bird, who had done such a great job of running Safeway for such a long time, just made very, very bad, poor decisions one after another. So basically, the partnership was 2 years on. We're like 2 years later in the book from last week when we were introduced to Safeway and the Walgreens projects. And I like the name of the project that they have for Safeway, Project T-Rex. Okay, and so that was one I didn't necessarily ask about, but that was kind of the project that was going on. Safeway spent $350 million remodeling half its stores to create these wellness centers, and everybody's asking, "Oh, what's this big play that you're going to have in 2012?" And it's like Bird is saying, "Well, we rebought our shares of stocks not to disguise the fact that we had poorer earnings during this year, but because we think that we're going to do really well next year, and buying back the shares makes sense." So he's on the earnings call, and everybody's like saying, "Oh my gosh, this is going to happen. This is going to happen. This is great." First quarter comes. It hasn't happened yet, but it's still going to happen. It's going to be great. Second quarter. This is going to happen in fourth quarter. I promise. That was Steve Bird said. Okay. Third quarter, fourth quarter, nothing happens. Basically, Theranos did what they always do. They did nothing. Okay. They actually didn't accomplish anything. They did a few things. They basically started moving forward with some blood testing on the Safeway campus, because they actually had a health or wellness facility on the Safeway, the corporate headquarters, which was in the San Francisco area. And that went really, really well, I think. I think that one was going fairly well. No, okay, that did not go well. So they were doing blood testing, and the guy who's in charge was saying, "All right, we got these Theranos devices that are top of line that are going to come in. We're going to test blood, and everything's going to be great." Turns out, no, we're not actually releasing the Theranos proprietary devices because they don't exist. Or, well, they do exist, but they don't work. And so they said, "We're going to have phlebotomists there instead, or we're going to ship the blood over." And I try not to reveal spoilers for anything, but we're going to see something very akin to this here in a few chapters. We're just going to be kind of like, I can't believe Theranos pulled this off, and they managed to snow everybody about this. This one was kind of problematic in that they were outsourcing some of the blood testing to a place in Utah, and so it was waiting 2 weeks to get results back. And for the ones that were being done in-house by Theranos Labs in San Francisco, they were bad. They were like really bad. They were way off because they had a lab in the Theranos facilities, but it was run by people who had no idea what they were doing. And so, and when somebody who knew what they were doing tried to report and told Sonny about it, Sonny said, oh, well, we probably should fix this. This is a problem, and we're going to correct this, because Sonny's a very conscientious individual, and he takes these certain things very seriously. Obviously, I'm being facetious again, okay? Sonny was just kind of like, "You're fired." "Okay, I'm going to hire you back, but you're fired again 3 weeks later." So, Yeah, very, very bad situation. And Steve Bird eventually was ousted as the CEO of Safeway, replaced, and they were trying to figure out what they're going to do with the empty space. So the Safeway situation is just kind of deteriorating. And Theranos is just another business opportunity because they can't get its act in order. And then we talked about the U.S. Army and Mad Dog Mattis saying want to use these blood testing devices. And you think with all this, Mattis would just be kind of like really frustrated, just kind of like, well, this thing's a big scam. We're going to see Mattis again, and he's going to be part of the board of directors a little bit later in here. And so I think it's amazing that they had all this problem and all this turmoil, and yet when he retires, he just basically says, "Oh, Theranos is great. Yeah, we're going to go ahead and board of directors." And there's some obvious problems there, but yeah. So this is actually a precursor for some of the things we're going to see later on in the book. But the Food and Drug Administration steps in because the LTC shoemaker says, this is not a lab developed item. This is kind of under the oversight of FDA. And they say, yeah, we believe so too. So let's go ahead and call the CLIA and do an inspection. And Theranos tipped off about it. So they basically changed their tune. They said, oh, whoa, we never said that we were going to try to bypass laboratory approval. We are fully in line with the FDA. Which, of course, that was a lie. That they were not in line with the FDA at the beginning of the chapter. They only changed when they found out there was going to be inspection coming. The guy did the inspection, said, you know what, this is a crappy lab, but I don't see anything that's major cause for concern, so I'm going to let Sonny off with a warning and move on. And yeah, then the end of the chapter is basically everybody retires and nothing happens. Okay, and then we had Fuse, and the Fuse saga is now just beginning. So Fuse saga, they're pursuing Fuse for patent infringement and basically saying that they had issued the patent, and it's Fuse's son, who was estranged from John Fuse, basically in his role of lawyer, had taken Theranos' patent with the previous lawyers, the attorneys they've been working with. So there's this whole big rigmarole, and this whole thing comes off the fact that Theranos hired this monster of a law firm to represent them. So it's Boyce, Schiller, Flexner, I think is what they're called. And David Boyce is just like one of the most well-known lawyers in all of U.S. history. He handled the the monopolistic competition suit against Microsoft in the 1990s. He handled the election back in the early 2000s, and so now he's handling Theranos. And it's very interesting. One of the things that I think is very interesting about this particular chapter, Boyce didn't actually accept monetary payment for his services for Theranos. Did you all catch that? What did he receive instead? Shares in stock, okay? Now think about this from an audit perspective. Could we do this as auditors? No, that would be a very big violation of interest because we'd be auditing a company that we have partial ownership in. And I don't know, the rules are obviously not as hardly held for law firms, but I still think that that's kind of a conflict of interest, in that he's an owner of the company, and now he's representing the company from a legal perspective. That's a little bit suspect to me. But yeah, we kind of see John Fuse blew up, and he said, yeah, I'm going to do everything I can to bring down the downfall of Elizabeth Holmes. And the good news is that that was kind of prophetic, because Elizabeth Holmes by the way, spoiler alert, she does get caught. So in case anybody doesn't know, I know this is actually factual history I'm talking about, but you know, we'll wait to see how that happens. But he's kind of going to do everything for the possible downfall. And Richard Fuse and his younger son Joe, they're kind of fighting tooth and nail. They're hiring law firms, but they're trying to fight this just like the most powerful law firm in the entire world that's representing Theranos. And there's a lot more to that saga that's going to kind of come in place. But for right now, Richard Fuse is on the defensive. He thought he was going to be clever. He thought he was going to be like, well, I can take care of this little girl. And the little girl has a lot more backing than he was prepared for. So yeah, Richard Fuse still to come. All right, CPA prep time. This is the time of the day that everybody looks forward to. It's like, all right, how much do I seem to remember about this stuff? So let's go ahead and talk a little conversationally about some of this information. So we're talking about analytical procedures at the beginning here. So we're in week 6, which would basically be part 3 of the CPA prep. So there's 6 modules. We're in that latter part of the 3rd module. I will tell you that for right now, all the stuff should seem very, very familiar to you up until this to the point that we're at right now. That's going to be true through the next module that we're going to cover next week. And then when we come back from spring break for more CPA prep, we're going to take a drastic turn. We're going to be covering concepts that we've talked about, but we've not gone into depth in auditing. And so these are going to be like assurance and attestation services, We're going to talk a little bit about the nature of those. We're going to talk about some requirements with respect to external environment. So yeah, it's going to be governmental audits will be included in there. We'll talk a little bit about stock reports. We'll talk about single audits. There will be things that are very familiar, are going to sound familiar, but they're not. We haven't gone into a lot of depth on. So there's going to be a lot more digging that we have to do for these. But this one's pretty straightforward question. Of the following non-financial information, which one auditor most likely consider in performing analytical procedures during the planning phase audit? So keep in mind, when we're talking about analytical procedures, either we're trying to develop an expectation, we're developing an estimate, or we're looking at changes over time to see how things have changed over time and if things differ from an expectation. Now, because this is non-financial information, it's unlikely we're going to use a ratio analysis or we're going to use a trend analysis. Not impossible. There are certainly ratios that use non-financial information, but it's unlikely. It's more likely that we're going to use that information to develop an expectation. So which of these would we say would be most useful in developing an expectation about information in the financial statements? Turnover personnel in the accounting department. What do you guys think? Yes or no? I'm going to say no on that one. That's probably not one that we would use for developing expectation. Objectivity of audit committee members. That is definitely a non-financial piece of information. It's not even quantifiable. That's why it would not be good for developing an expectation. Square footage of selling space. What do you think about that one? Well, could we take square footage of selling space and multiply it times what we think the gross profit would be per square foot and develop an expectation for gross profit? Something along those lines, just off the top of my head. That seems like certainly a possibility. So square footage of selling space, we'll put a pin in that one because that's a possibility. Management's plans to repurchase stock. That would be relevant information, but not for analytical procedures. Okay, again, not a quantifiable piece of information. The only thing the things that are really quantifiable are turnover and square footage. And turnover doesn't really have any relationship to other financial statement data. So this would be our answer C here. That's when we could develop an estimate on and use to determine what our expectation is for the current period. An effective internal control system may be compromised by all of the following except. So we're talking about inherent limitations of internal controls. Everybody remember we talked about this in 417, the inherent limitations. So we have management overrides, we have collusion, and errors or mistakes. So we're looking generally for those things, all right? So let's go ahead and look at each of these. The application of fewer than 20 principles. That is definitely not in that list. That is definitely not on that list. And when it's talking about 20 principles, it's probably talking about the COSO framework principles, which if you remember when I talked about this back in 417, COSO framework actually only has 17 principles. So it would be very difficult to apply more than 20 principles if you're using the integrated framework. So this is probably our answer, but let's look at the rest. External events that cannot be controlled by the entity. Now, this is not in our list of 3 items, management override, errors or mistakes, collusion, but would it be sensible to say that we cannot create controls over something that can't be controlled? Yeah, because the word control implies that there's some semblance of control in the organization. If these external events cannot be controlled by the entity, we can't create controls to address those, all right? So this would probably be a loose inherent limitation. It's more broad than what we talk about within the organization. I would say this is a reasonable answer for something that could compromise internal controls. Management collusion, well, we already know about that, or subsequent overrides of capture controls. We got a twofer. We got override and collusion both listed here. So C is definitely one of those things that can be compromising controls. Inevitable human errors that result in major internal control efficiency. There's those errors again, okay? So B, C, and D are all things that we think could compromise controls pretty easily. The one thing we can't is application of fewer than 20 principles. That's just kind of a silly answer. All right. Most manual controls would most likely be suitable than automated controls for which of the following? So automated controls are going to be at the transaction level and try to make sure all transactions process. Now, if you put an automated control in place in a system, if you're the organization that's creating a control and you're trying to create it, is that for something that you think occurs infrequently or very frequently? What do you think? Automated controls, would that be for something that's infrequent or highly frequent? Lost everyone. Frequent, very frequent. We want something that actually checks. The system itself is doing the work. So it needs to be something that's consistent, current, and basically doesn't require a lot of judgment, okay? So if we're talking about manual controls, it's the opposite. Something that's infrequent, that's going to be a large infrequent transaction that requires some judgment, okay? So manual controls are suitable for which of the following? Large, unusual, or non-recurring transactions. What do you guys think about that answer right there? That sure sounds like the correct answer, but let's go through the rest. High volume high volume transactions that require additional calculations. Can a computer do additional calculations? What do you think? So if you buy a meal at the restaurant, can it actually add sales tax on there for you? Yeah, okay. So a computer can do that for us. A cash register can do that for us. Situations with routine errors that can be predicted and corrected. So routine that can be predicted. Does that sound like something that would be applicable to an automated system? If we know what's going to happen and we can correct the problems, yes, okay, that's fine. Circumstances that require a high degree of accuracy. What do you guys think about computerized systems, automated systems? Are they accurate? Generally more accurate than human beings are, okay? So B, C, and D are all examples of things that we would want automated controls. This one would be a manual control. So something that's not routine, that requires a high degree of judgment. In assessing control risk, an auditor ordinates section from a variety of techniques, including what? Oh, one of my favorite questions. Which of these are test of controls? Fortunately, we just talked about these in zoo fencing. Remember we talked about the different types of controls tests you can do? So hopefully you picked this out. So obviously the answer is C, comparison and confirmation, right? Yeah, because confirmation is always a test of controls. Yeah, no, well, right, okay. B, reperformance and observation, okay? So inquiry and analytical procedures, inquiry, yes, analytical procedures, no. Reperformance and observation, both of those are yes. Comparison and confirmation, comparison is not one of the types of evidence we talked about. Confirmation, never a test of controls. Inspection and verification, inspection, yes, verification, no, all right? So reperformance and observation is our answer. When there are numerous property equipment transactions during the year, an auditor who plans to assess control risk at low usually performs what? Okay. So let's talk really quickly about the intuition that you should have going into this question, okay? So if we're assessing control risk at low, does that mean we're adopting a substantive strategy or a reliance strategy? A reliance strategy. We're saying that we're going to rely on the client's controls. A reliance strategy requires auditors, so true or false, a reliance strategy requires the auditors test controls. That is a true statement. If we use a reliance strategy, they are required to test controls. In a substantive strategy, they're not required to test controls, but under a reliance strategy, we are, okay? So we actually have to have test of controls, which means it has to be answer A or C. That's one of the two answers, okay? All right. So if we're talking about what we'd be doing for numerous property equipment transactions during the year, we're going to do test of controls and either extensive test of property and equipment balances at the end of the year, or test of controls and limited test of current year property and equipment transactions. Now, this is going into the nature of testing property and plant and equipment. Remember, we talked about the nature of roll forwards in property, plant, and equipment back in 417, and I said we don't want to test all of the balances. Instead, we want to test what changed from the previous year to the current year. Because if we know that the beginning balance is correct by virtue of the fact that we already audited it in the previous year, all we have to do is test the changes between the period to verify the ending balance. So think about this. Beginning balance, we know for 100% is correct because we audited that in the previous year. We're trying to validate the ending balance. What's the easiest way to go about that? Test the transactions in the middle. And so that's what C is telling us, okay? Test the current year property equipment transactions. That's what we would do for normally for property and equipment transactions. So C is our answer. This is actually, I really thought that was a good question. So hopefully, even if you didn't get the correct, you understand the intuition and what you should be thinking about when you approach questions like that. All right, question number 6. Which of the following conditions or events would most likely cause an auditor to have substantial doubt about the entity's ability to continue as a going concern? All right, so this is basically saying we're doing the audit, regardless of what we think about the financial statements, we have some concerns that the entity's business is under duress, right? Which of these scenarios causes an auditor to look up and say, wow, they may not be in business a year from now? So significant related party transactions are pervasive. I would be concerned about that, but not from a business duress standpoint, okay? If related party transactions exist, I would be more concerned about fraudulent activity, not that the business may be going under, all right? So related party transactions, they're certainly problematic, but they don't necessarily indicate duress in the organization. Usual trade credit from suppliers is denied. So our client is trying to buy things on credit as a normal business to business model would. They basically said, we'd like to buy inventory, and the suppliers say, I'm sorry, but we only accept cash up front. If you're the auditor about that, what are you going to say? That's bizarre. That seems to indicate financial distress to me. Okay. So yeah, financial distress could be a signal in B. So B is probably our answer, but let's go through the rest. Arrearages and preferred stock dividends are paid. So what's an arrearage? Have you heard that term before?
It's not that if you don't pay it, then the amount carries over, so you
Right.
have to pay it eventually.
So basically, Yeah, preferred stock had not been paid in previous years. And they're all coming back and say, hey, I got extra money, guys. Let me go ahead and pay you back what I owe you. All right. Is that a signal of financial distress or is that a signal of financial wellness? Financial wellness is my guess, is if they're paying money that's owed to their shareholders, probably says, all right, we got everything taken care of. We can now go ahead and pay you what we owe you. Restrictions on disposal of principal assets are present. Okay. So basically we're saying certain assets we cannot sell, we cannot get rid of for any reason. Okay. If they're not willing to sell off assets, is that a signal that they're doing well or doing poorly? Probably doing well, okay? Because if you're doing poorly, you're like, okay, we need more money, we need more cash, sell, okay? So that would be a signal to me if that was a problem, if that was the case. So B is going to be our answer. Which of the following factors most likely would cause a CPA not to accept a new audit engagement? Okay. So we're talking about scenarios in which we're trying to determine if we want to talk to a new client or want to take on a new client. Keep in mind in the scenario here, we're kind of concerned about any scenario that would prevent us from being able to do our job properly. All right. So A says the prospective client's unwillingness to permit inquiry of its legal counsel. Do we need to talk to legal counsel as part of our audit? 100% yes. Okay. They're a source of corroboration for a lot of our information. That is a restriction on our scope. That would be an area where I'd be like, hold on a second. If you're not allowing me to do this, I can't do my job. Okay. I probably wouldn't take the engagement in the first place. So A is probably our answer, but let's go through the rest. The inability to review the predecessor auditor's working papers. Okay. That sucks. Okay. If we can't review the predecessor auditor's working papers, does that necessarily mean that it's a no-go? No, we can treat the audit just like from the base audit, that we're just going to start with a blank slate and test everything. So it'll be unfortunate, but it doesn't necessarily prevent us from performing the audit. CPA's lack of understanding of the prospective client's operation in industry. So we take on a new client, we don't understand anything about the industry. Is it possible for us to gain an understanding of their industry? Certainly, okay. We can actually determine that within a reasonable amount of time. So yeah. Indications that management has not investigated employees in key positions for hiring them. Okay, so that's kind of associated with a risk and maybe even considered a fraud risk. But is that something we can address during the course of our audit and our planning? We identify the risk and we adapt to it and address that properly? Certainly. So we identify this as a risk, but this doesn't prevent us from doing our job, okay? We're going to say, all right, you have not vetted your employees properly. We're concerned about the risk that may present, but we'll address that during the audit, okay? So A is our answer. Which of the following procedures will provide the most reliable audit evidence? So what's our mnemonic again? AEIOU. Auditor-generated evidence, external evidence, internal evidence, oral evidence. Oral evidence, by the way, is observation and inquiry. Okay. So inquiries of clients' internal audit staff held in private. What do we say that on the scale of reliability? Is that high or low? It's inquiry, so it's low. Okay, it's oral evidence, that's low. Inspection of pre-numbered client purchase orders filed in the vouchers payable department. So that's going to be internal evidence, which is kind of medium. All right. Analytic procedure performed by the auditor and then these trial ballots. This is auditor-generated evidence, but keep in mind, this is based on information provided by the client. So analytical procedures are considered to be medium reliability because they do utilize internally generated evidence, internal evidence. So even though the client or the auditor does prepare the analytical procedures, it's based on information provided by the client. So that's going to be medium. Inspection of bank statements obtained directly from the client's financial institution. So is that internal or external evidence? That's external. So that's our highest level of evidence that we have amongst these four options. You know, we don't have any auditor-generated evidence here, not purely generated evidence like reperformance, recalculation, or inspection of tangible assets. So we're going to go with D because that's the only one that's the next level. That's the external evidence. All right, how we do, guys? 8 out of 8? I don't see any nodding heads. All right, that's okay. That's okay. It is not important that you get 8 out of 8 on this. It's important that you get 8 out of 8 on the CPA exam. That's what our eventual goal is. That's the goalpost right there. Okay, that's the goalpost. All right, let's go ahead and work through the task-based simulations now, or task-based simulation now. All right, so we've got some testing that's been done as part of cash testing. And basically, we're going to be looking at this information and determining based on the details that are provided. Oh, goodness gracious. Sorry, the spreadsheet that I have is not showing everything that I want to show. All right, well, I'm just gonna have to wing it then, I guess. All right. So there there were three questions you had to answer for all three of these, okay? Was sufficient appropriate audit evidence obtained? Were there any issue with audit evidence or work paper preparation? What additional test work, if any, is required in the audit procedure? All right. So the first question, our first test is going to be obtain standard bank confirmations for all bank accounts, trace the bank balance to the bank confirmation, bank reconciliation, investigating exceptions noted. Quick question. Is trace used properly here? No, because you notice the insertion that says existence and accuracy. If we're using trace properly, it's a test of completeness, okay? So keep in mind that even though they use the word trace, it's not used properly in the scenario. Just keep that in mind, that will pop up, all right? So we're not necessarily looking for completeness, we're looking for the assertions that are specified. So let's go ahead and take a look. Let's look at the confirmations, okay? All right, confirmation here for the checking account looks good. Confirmation here for the savings account. Anybody notice anything that's problematic here? So Matt is nodding his head. Does anybody else know anything problematic? Give you a hint. Right at the top of the page, there may be something that you want to observe.
On the column.
Okay, what do we know about confirmations? Who's responsible for handling the confirmations? We are, okay? If the chain of custody ever goes from from us to the third party, if it is ever broken, can we rely on that confirmation? No. In this scenario, what happened is the bank said, here's our savings account information. Let's email it to the client. They can give that to the auditor. What could the client do with that information once they get their hands on it? They can manipulate it, which means we can't rely on it. So we're going to say sufficient appropriate audit evidence is said. We're going to say no. Were there any issues? We're going to say bank confirmation for the savings account was received directly from the client. And then what's the answer that we're going to fix this? We're going to say have the bank resend the confirmation directly to the auditor. By the way, I would like to point out, okay, for purposes of effort, that all of these individual drop downs have different possible answers. I had to type each of those in. I want you to note the amount of effort, and I want that to be reflected in my evaluation. It's like, Dr. Barnes really cares, okay? Dr. Barnes really cares. All right, actually the drop downs over here are pretty easy because this is just yes or no, okay? So trace deposits and transfer the bank reconciliation and subsequent period bank activity. Again, not correctly use of trace, but ignoring the fact that we're not using the word trace correctly, where there's sufficient appropriate evidence obtained. So let's go ahead, let's take a look at the bank reconciliation. So deposits and transits, you will notice here that we've got three of them. All three have tick marks, which if you look at the tick marks, say trace to the subsequent period bank activity without exception. So that term subsequent period bank activity, we called it something differently back in 417. Does anybody remember what we called it back then? Cut off bank statement, yeah, okay. Same exact thing. You will see different terminology used on the CPA exam. That doesn't mean that it's something just brand new. You just have to kind of analyze it and put it in the context of what you already know. So let's check into the cutoff bank statement, because remember, if the deposits were genuine, they should have cleared after a certain period of time. And it certainly looks like they all cleared, okay? All these cleared. So it's 15, 12, 30,000. So what's our conclusion here? Do we have sufficient evidence? Answer is yes. Okay. So what are we going to put down here? Was there any issue? No issues noted. And then no additional work is required. Everybody understand that one? Yeah. The reason this is important is we're going to take a look at that bank reconciliation again. So we're going to look at trace the outstanding checks in the bank reconciliation. Subsequent period bank activity. Again, ignoring the fact that trace is used improperly. Boy, they're just hitting for zero right here on the use of the word trace. Okay. So trace the outstanding checks, the bank reconciliation, the bank activity. So here we go. You will notice we have the checks here, 94, 99, 101, 103. These are all outstanding. And three of these have tick marks next to them. And they have the same tick marks before going to the cutoff bank statement or the subsequent period bank activity. If we go here and look for 8,500, you will notice that 8,500 is not listed here. Is that a problem? Basically, what that's saying is that the client is reconciling this $8,500 check, but it's never cleared. We don't know what this check is. We can't find this check. There's no evidence of it. The whole point of the cutoff bank statement or the subsequent bank period activity is to say if there's an item that's pending, it should clear within a reasonable amount of time. So going back to our document here, sufficient appropriate audit evidence obtained? Answer is no. Why? We have one outstanding check did not clear the operations checking account. Bank reconciliation. So subsequent period bank activity. Yeah, there we go. So what are we going to do? Does this necessarily mean that they're up to something devious, that the client is trying to pull the wool over our eyes, or could there be some other explanation? There's a possibility of multiple explanations here. We're not trying to come to a conclusion yet as auditors. We're trying to say what next. So what are we going to do? We're going to review the underlying documentation, determine whether the outstanding check is a valid reconciling item. So should it be on the bank reconciliation? Because we can't see it clear on the subsequent subsequent period bank activity. So is it a real check or is it not? If it's a real check, we need to find evidence of it. If it's not a real check, we need to remove it from the bank reconciliation. All right, now we have something for completeness. And you'll notice they don't have the word trace here at all, okay? Isn't that just frustrating? Trace, trace, trace. No trace down here, okay? This has no relevance to the question whatsoever. I just want you to share my fury. I want everybody in this room to share my anger. All right, so scan the subsequent bank activity, significant usual items, obtain near year ends, obtain explanations, review supporting documentation for all such transactions, and ensure that such items are included in the bank reconciliation if appropriate. All right, so basically what we're saying is let's take a look at the subsequent period bank activity for additional items. This is not a step we talked about, by the way, but again, you may encounter this on the CPA exam where you encounter something that you've not done before. When you encounter something like this, look at what it's asking you to do, follow those steps, and then make the intuitive judgment, all right? This one's actually not that hard. What we're going to do is we're going to look at the subsequent period bank activity, and we're going to see, does everything we see clearing make sense? So one thing we're going to note, so make sure that I get this, is, let's see, yeah, okay. Make sure that I get my correct statement here. So you'll notice here that we've got checks from 94 to 103 that are clearing, okay? So 103 is maybe the latest check that occurred in the previous period. 94 would be kind of the earliest leftover, but if we go to subsequent period bank activity, we can kind of look at the check numbers that are clearing here. And if we go to January 5th, year 5, there's a check here, number 95. Now, based on sequential nature of checks, now, can we agree that checks are sequential documents? If you open your checkbook, should you see like check number 1, check number 2, check number 3? What is the purpose of that sequence? To say that if you write a check at a certain period of time, that the following check should be, or the subsequent check should be on that same date or later. So we know check number 94 was written at period end, and it was written in the previous year. It cleared in January 2nd, year 5. So if we go to the bank reconciliation, it said it was written, December 1st, which is really weird why it took a whole month for that to clear. But it was written December 1st, very early in December. And then we're looking at check number 95, which looks like it was clearing in January 5th, year 5. Logically speaking, if the last check that was in our sequence for for year 5 was, why do I keep looking at the wrong one? Okay. The last check we looked at was 103. Where should 95 be? Should it be recorded in year 4 or year 5? Year 4, okay? Because it should fall in between 94 and 103 because it's a sequential number, but it's being recorded as an item in year 5. So this is something we want to investigate a little bit further because we're not sure why on earth we got this one outstanding check that looks like based on the number of the check should have been recorded in the previous period. Based on the dates, it sure makes sense because 94 and 99 were both recorded early in December, and it kind of falls in between those, so it should have been an early December item. So let's go ahead and go back and say, are we happy? The answer is no. We got an item here that we have to figure out what was the nature of the issue. So a significant check clearing the operations checking account in the subsequent period bank activity was not included in the outstanding check listing, okay? So it should have been on our bank reconciliation, the outstanding checks, because it falls in between 94 and 99, but it's not there. So what do we need to do? Well, this one's one. We're going to talk to management. I don't know which one's which. Is it this one? So obtain an explanation from management for significant items clearing on the operation checking account, subsequent bank periods that do not appear. So apologies, I got the wrong one. Same exact item, but it's not appearing on the reconciliation. So basically, we're going to talk to management and say, here's the deal. You've got this check that cleared in year 5 that looks like it should have been on the bank reconciliation based on the sequence of the numbers. Why was it not on the bank reconciliation? I need to understand why that document is not there, or why that check is not there. I butchered that explanation. I was kind of jumping around all over the place. Does everybody understand the logic behind this? It's a little bit more intuitive when you think about it for the sequential purpose. That 95 should fall between 94 and 99. So why is it not here? That's basically what we're saying here. We need to talk to management to figure out what's going on with check number 95. Why is it not on the bank reconciliation? All right. And with that, we are done for another week. We'll be back next week. I think week 7. I think we're doing AI next week. Should be fun.